Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems from the digital study guide for Chapter 12, the short exercises. Note: accounting is about understanding the concepts and applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help you if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. Okay, so in this series of videos, we're going to work on the short exercises and realize that most of this is all repetitive. You've seen this before in Math for Business and Finance, at math applications, or in the focus on decision making portion at the end of each chapter from this particular textbook. So this stuff should go by relatively quickly, all right, with not as much explanation needed. So identify whether each of the following items would be caused by income from continuing operations, income from discontinued operations, or an extraordinary item. All right. So 12,000 insurance proceeds on a fully depreciated piece of equipment that was lost in a hurricane. So the lost in the hurricane is the extraordinary item. Okay, it's not about continuing or discontinuing operations. An $800 gain on the sale of office furniture. Right? So selling office furniture as part of the normal operation of the business is continuing operations. Income tax expense is part of the continuing operation. $106,000 loss incurred as a result of closing the Walla Walla store location, right? Because it's closing, that is discontinued operation. $2,300 loss occurred as a result of the company vehicle being involved in an accident. Well, that's part of the normal operation of a business, so that's continuing operation. Horizontal analysis. Right. Let's see here. Wolf Inc. had net sales of $212,000 and cost of goods sold of $128,000 in 2012. Net sales of $263,000 and cost of goods sold of $161,000 in 2013, and net sales of $325,000 and cost of goods sold of $200,000 in 2014. Round your answers to the nearest tenth of a percent. Right? So 1, find the percentage of increase in sales from 2012 to 2013 and from 13 to 14. And then find the increase in the gross profit. All right, so let's do all of this sort of all in one fell swoop here. So we're going to look at net sales, and we have the cost of goods sold, which then gives us our gross profit. Right, so we have 2012, 2013, and 2014. So net sales in 2012 is $212,000. 128,000 is my cost of goods sold. The difference between those two is 120. I'm sorry, is what am I doing here? Is 84,000. In 2013, we have 263, 161. So that's 102. Okay. Notice I have to calculate the gross profit there. And 325, 200, which gives me 125. Okay. So to go from 2012 to 2013, okay, so for my net sales, to go from 2012 to 2013, the difference is 263 minus 212, which gives me 51, right? So I have 51,000 increase in 2013 and 161, no wait, it says net sales and gross profit, so I don't have to do cost of goods sold, okay? I mean, I could if I wanted to, right? But that's, and you could if you want to, but it's just a lot of extra math here. So I have 102 and less 84, which gives me 18. So my gross profit is 18,000. And then as a percentage, okay, we're going to take, we have, for our net sales, we have 51,000, okay, but we're taking that 51,000, and remember the base, okay, the base is the year end, which becomes the beginning for the new year. So we're going to be looking at dividing it by 212,000, right? And that gives us 24.1%. When we round it, it's like 24.05, right? So our percentage is going to be 24.1%, and this is for the 2012 to 2013. And we do the same thing, 18,000 divided by the 2012 number of 84,000, and we end up with 18 divided by 84, we end up with 21.4%. 21.4%. Okay, so this here is for the 2013, to go from 2012 to 2013. And we're basically going to do the same exact thing for going from 2013 to 2014, all right? 325 less 263 gives me, let's see, 262. For net sales, it's 62,000. And for the gross profit of 125 minus 102, which is 23. So that's 23,000 for my gross profit. And I take the 62,000 and I'm dividing it by the 263 because that's my basis, all right? And that gives me a 23.6%. And we're taking the 23,000 and we're dividing that by the 102. And that gives me 22.5%. So that's 22.5%. Okay, so that is how you work out this particular problem. Notice that everything that you've done here is something that you've done before. There's no there's nothing special that's being done here. You should be able to know where you're getting these numbers from at this point in time, but if you don't get it, then go back and watch the theory videos that apply to those particular things. Okay, go back and watch the horizontal analysis video, the theory for this chapter, or go back into the math for business and finance, right? Videos, and watch that. Right. Next problem. Vertical analysis. Okay, so now we're going to do a vertical analysis. So the records of Sullivan show the following: cash is 14.4, receivables 56, inventory, prepaid, net plant and equipment. Construct a vertical analysis of the asset section. All right, so I'm not going to create the full statement here, but we're going to have our assets here. And as far as current assets, all right, I'm going to have my cash, my accounts receivable, right, inventory, and prepaid expenses. So my cash is 14,400. My receivables are 5,600. My inventory is 23,200. And my prepaid is 2,400. And so that means my total current assets are 45,600. And then I have property, plant, and equipment. And my property, plant, and equipment is 34,400. And so that gives me total assets of 80,000. Okay, so now we're doing a vertical analysis, and we're using the total assets here as the basis for the percentages. So what I'm doing is I'm going to take the 14,400 for my cash and dividing it by 80,000. Okay, and that gives me the percentage, right? So this is my percentage column of 18.0%. Right, 5,600 divided by 8,000 is 7%. 80,000 is 7%. 23,200 divided by 80,000 is 29.0%. 2,400 divided by 80,000 is 3.0%. Now I can add up these percentages and get the same percentage, or I could take 45,600 and divide it by 8,000. I'm going to end up with the same number of 57%. And then 34,400 divided by 80,000 is 43, which means I have 100% for my 80,000, right? So since 80,000 is the basis, we assign that as 100%, okay? And notice here that when you had, I can add these up in order to get this number. So I only have one figure left, I could just subtract minus, right, in order to get the 100%, all right? So if I take 57% and subtract it from 100%, that'll give me the 43%. So I don't have to do the division. It's up to you to, there's more than one way of arriving at that number, but realize that, for these percentages, you do have to do the division. You take the number and divide it by, you take the number here and you divide it by the basis here of, in order to arrive at the percentage. So you have to do these percentages here, and then when you're doing division. But to obtain the rest of the numbers, the rest of these figures, you could have just did the math, added these to get that number. And since you only have property, plant, and equipment left to do, you could take that and subtract, the 57%, you could subtract it from 100% in order to get the 43%, because the 80,000 is 100%. Okay, so more than one way to do that, but you do have to work through these initial percentages. Okay, so that is that particular problem. And okay, yep, I'm going to pause, stop here, and pick up in the next video. Okay.